When will Dr. Phil start raising interest rates? Why is Warren Buffett building a cash reserve? Is he worried? And will CBA's profit keep the stock price rising? I'm Peter Switzer.
I'm Paul Rickard.
And we're mad about money. Paul is becoming controversial. When will Dr. Phil raise interest rates? And will he do it 5 times and knock a lot of people for a 6 who are over borrowed?
Well, Dr. Phil still thinks he won't need to raise interest rates till 2024.
Love that. Hope he's right.
We think it's a little bit sooner, Peter. The market at the moment is betting on sometime late next year. It seems to be coming earlier. Yeah. Look, what's really important is still the wage data. That's out today. Big quarterly number because the expectation is still pretty low, about 0.5 of 1%. An annual rate of 2.2. But you've got to say, Peter, the risk is in a row number because I'm seeing wage pressure elsewhere. So, but the Reserve Bank isn't. So they seem very, very subdued.
And they should know more than you.
They should know
That's
more
their
than
job.
you. Yeah. It is their job, right?
It is their job.
And they've got a lot of people up there in the Ivory Palaces, 60 Martin Place to do all these things. Yeah. We don't.
That's right. But the critical thing is this, and why Paul says wage is important is that Dr. Phil wants wages to really grow and he wants them to stay up there. So even if there is a rogue number, the market, I think, will overreact. But he'll say, oh, look, this is only temporary.
Yeah, Dr. Phil wants to get inflation sustainably between 2 and 3%. For that, he needs wages growth between about 4 to 5%, right?
Yeah.
That's because there's extra productivity, or that's the theory at least, is that we become productive a bit more each year because of technology. Therefore, you need wages growing at faster than inflation to actually get inflation up, right? Does that make sense? That hasn't been the case the last few years. That's why it's really important. But what I worry about, Peter, is that I just see other data and other anecdotal data and think at some stage the risk is we're going to get a big number. But it's a long way to go to Dr. Phil's target. And that's why he says 2024 at the earliest. And he maintains that line.
Have faith on the doctor. Let's go to the next one.
Yep, he should know more, as I said.
On the next topic, and I've had a lot of people I know who have no idea whatsoever about markets, economies, and investing.
Most people.
Most people.
That'll be us too, right?
But they've got money in this. Oh, Warren Buffett has been building up a cash reserve. Does he know something that we don't know?
Well, I think he does. Warren,
in lots of areas.
In lots of areas, right? We're all Warren Buffett devotees.
Yep, exactly right.
We are too. And when Warren Buffett is doing stuff, you take notice. But look, I think Warren's just acknowledging that the market is at high levels. Some of these sectors and some of the sectors he's selling down and have had really good gains. Yeah, he's just locking in some profits and saying there's better value elsewhere. Yeah, I mean it's just normal rotation.
And this friend of mine who was shivering, worrying that his many millions would be disappearing by another crash, I said to him, well, look, I haven't heard about Buffett doing this, but I suspect he's actually building up a cash reserve to buy something. And so after going to a lot of research yesterday, that's exactly what I found. He's doing exactly that. He's selling some, he's building up cash reserve, and he's buying others. So he's not running away from the market. He just thinks that some companies are overvalued. But by the way, his biggest holding still is Apple. And Coca-Cola, American Express, and Bank of America. So he's still sticking to pretty solid companies that basically do well when the American economy does well. Okay, so don't worry, everybody, if you've got those Buffett jiffers.
Hang on to your Berkshire Hathaway shares, right? That's where you have.
All right, let's go to the final one. Today we learned that CBA's profit was pretty good. Will the stock price get rising?
It's a quarterly profit number, $2.2 billion. It's pretty much as expected. Now, the positives are good volume growth. So they're growing above volume in terms of home loans. They're growing above volume in terms of business loans and in deposits. So that's all positive. But if you actually look at half on half or this quarter versus the last half, it's pretty flat. Right. And CBA is trading at a big premium to the other major banks. So to be honest, this quarter's result from CBA is not that much better than NAB's quarterly result.
But was this in the lockdown, Paul? Were lockdown going on?
I don't think lockdown's got a big issue to do with, Peter, because if they're stripping out the bad debts, right? If you're looking for growth and revenue growth and expenses, it's flat on both, right?
Yeah. I'm thinking the first quarter is basically July to before September, right? So lockdowns were on. So would you have been borrowing if you were in Victoria or Melbourne? Good
look,
question.
you
Good
have
point,
because
Switzer. You can say that. Good point, Switzer. I didn't think about that.
I don't think lockdown's got a big impact on it. I mean, it's a little bit. I mean, I think what I suspect is going to happen is the market's going to say they're not going to sell CBA, but the market, new money in banks is not going into CBA. I think that the strategy here, it's the best and the worst. People want to hold on CBA because it's the strongest, and people will look at places like
so
NAB.
if you're a punter, you go for Westpac because they've been bashed up.
For a real punter, you go for Westpac because they've been bashed up for the most.
Yeah.
I think the best bet still is NAB.
Yeah.
Simply because they seem to be, under Ross McEwen, they're about 3 years in. They seem to be getting a bit more on top of what's going on. It was a nice,
and
clean
the biggest
result.
business bank,
So most upside to the economy. I think ANZ's the most overpriced. I think ANZ's asleep. They're often asleep at ANZ. But look, this result's okay, but it's not an outstanding quarterly result. They're priced close to perfection. So I think the market will say,
good without being great.
Good without being great will be the market's view on the quarterly numbers this morning. $2.2 billion for the quarter. That's come out off the press this morning.
Okay, I'm Peter Switzer.
I'm Paul Rickard.
And
we're mad about money.